Hey folks, welcome back to the channel. It's Liquid here. Throughout the course of this month in October, I will trade one at the money SPX spread every day. So the last time for this challenge, we ended on Friday. I mentioned it's likely we'll see an update on Monday, and that's what happened. So this 58.15, 58.20 bull call spread I put in yesterday expired today, and I made a profit of 247. Based on how the market did today, I think tomorrow's going to be a down day, and that is why when the market closed, I put in this bear call at 58.65, 58.70. That is expiring tomorrow on Tuesday. So let's see what happens. And today is Tuesday. We're halfway through the month. It looks like the market did go down, so my bearish call was correct. Here is that option I put in from yesterday. 58.65, 70. Sold the bear call. It expired, worthless, so I made 237. So 3 days in a row where my estimate for whether the market would go up and down matches what actually happened. So far there has been 10 sessions, and it looks like 6 out of 10 times the strategy was successful, which is to be expected because from the data I've gathered, it does seem like the accuracy of looking at the next day is about 60 to 65%. So what about today, October 15th? Can we make it 4 green days in a row? The SPX finished the day at 58.15, and due to how the market traded, today there's only a 55% chance it will go down tomorrow compared to like a 43% chance it'll go up. So I'm still going to lean bearish. I'm going to buy the 58.15 put and sell the 58.10. So basically, again, at the money spread. And it looks like I can buy that for about $200.
Order filled.
There we go. So that's this one here. So hopefully SPX will close below 58.10 tomorrow, and then this market price will be worth $5. But who knows? Let's see what happens. And today is Wednesday. The market just closed, and it was an up day, which means the bear put spread I bought yesterday is now worth 0. So I paid $213 for it, and I lost all of that. My total for the month is $83. What about for tomorrow? By looking at today's candle, a longer wick on the bottom than the top, and also green, and a mirrored candle on the VIX, longer wick on the top than bottom, and the colors flipped, there's about a 63% chance for the market to continue rising into tomorrow, Thursday. Looking at my options chain for tomorrow, I'm going to try buying a call spread with 58.40 and 45.
Order filled.
Okay, so that filled at 235, and that's this one right here. So hopefully the market goes up tomorrow. All right, Thursday market just closed. This was 2 days ago. This was yesterday, had an update. And today was looking pretty good. It was up for most of the day, but ultimately it dropped by just a little bit, down 0.02%. So that was a loss from yesterday. Looking at the daily chart, you can see most of the day did happen up here. Price was trading higher than yesterday. So if I had sold my call spread, I would have made money. But the point of this challenge is to hold it until it expires. At the end of the day, it was really just the last like 5 or 10 minutes that it went negative. Going into the last day of the week, Friday, still likely positive for tomorrow at a 65% chance. So the market is at about 58.41. I'm pretty much going to repeat the same trade I did today, buying another call spread. The premium is going to be quite high for the 45.50, so I will go one strike up to 50.55.
Order filled.
And that filled at 255. Okay, let's see what happens with this spread tomorrow. Hopefully the market goes up. And it is Friday. Market has closed to end the week at 58.65. So the bull spread yesterday worked out and I made $242. And ultimately that takes my total to 88 for this month so far, with 7 wins and 6 losses. Just like the previous update, it's inconclusive because right now the odds are not much different than just flipping a coin. But there's still a couple more weeks to go in the month, so let's see how things turn out. In terms of for next week on Monday, I'm still bullish. So for October 21st, I will buy a call spread. Looks like I'll pay about $265 for this. My concern is that this pattern for this week, where we have a green, red, green, red, green in this order, looks very similar to back here in July, where we had green, red, green, red, green. And then what happened the next day was the start
Order filled.
of a downtrend that lasted for over a week. Okay, so that filled at 265. So hopefully the pattern we're seeing this week won't turn out to be the same as what happened before in July, where it was the peak, because I'm only using what the market did today to determine how Monday is going to go. So for that reason, I'm going to be bullish for Monday. Now let's wait and see what happens. And today is a Monday. The market came down to this green 9 EMA. On the daily chart, bounced and ultimately still finished lower. So my bull call spread I put in on Friday did not work out, and I lost the $268. In terms of tomorrow, when the price is above the 9 EMA, and you have a red candle with a longer wick on the bottom, it tends to go down the next day 60% of the time. So I'm going to buy a put spread at 58.55 and sell the 58.50. So I should pay about $200 for this.
Order filled.
Okay, and hopefully the market drops tomorrow. Even if it stays where it is at 58.54, I'll still make money because of the $200 premium that I made, minus like $100 from the value lost with the spread. So we'll see what happens on Tuesday. And it is Tuesday. Although it was a green candle for today's session, the day ultimately finished lower than the close yesterday, but not by much, only by 2.78 points. So my put spread did work out because market went down. However, I wasn't able to capture the full value because it stopped just shy of 58.50. If we go to the 1 minute chart, I was losing money when there were still like 5-6 minutes left in the trading session, and then there was this massive dump of like 10 points in the last 5 minutes. I would have made the most money, of course, if it closed here at 58.50, but instead I have to leave a bit of money, and overall I only made $179, but that is still a win for the day. In terms of the trade going into tomorrow, it's looking pretty bullish. The market pretty much closed at roughly the same price as yesterday, but a bit lower, so I'll go with 58.50 as my initial strike.
Order filled.
Okay, and that filled at 260. So we'll see if the market goes up by tomorrow. And it is Wednesday. The market actually dropped quite a bit. And although it did bounce up by the end of the day, it still ended the day pretty negative for the session. So the bull call that I put on yesterday did not make money, and I lost 263. What about for tomorrow? It looks like there's a higher chance for it to go back up, especially if Tesla earnings do well, which we'll get momentarily. So the SPX finished pretty much between the 57.95 and 5800 strikes. If I go to tomorrow's strike price and put on a bullish trade, maybe the 5800 I will buy and sell the 5805. Okay, so I'll pay again about 260,
Order filled.
similar to yesterday. Okay, so that filled at 270. And it's now Thursday, 24th. Let's have a look at the daily chart. I bought a call spread, hoping the market would go up at least higher than 58.05. And even though it was a red candle for the trading day, it ultimately did finish higher than yesterday's close. So that bull call spread I have is now worth $5, and I paid $273 for it. So that's a profit of $227. I also have a bull call on Tesla. I'll talk about this in another video, but I'm basically short-term bullish after the earnings beat on Tesla, so that's why there's that at the money call right there, expiring in a week. I'll link that video up here if you want to see how I place my Tesla trades. In terms of tomorrow, slightly bullish, only 55% chance of being up, but that's still good enough to make the trade. So I'll put in a trade at 58.15 and sell the 58.20. We'll try 270 first. So it looks like 275 is still
Order cancelled.
not getting bought. So maybe I'll move up a strike to 220, 225.
Order filled.
Okay, so that's filled at 265. So the market really thinks that prices are going to move higher tomorrow. We'll have to wait and see what happens for the last day of the week. And today is Friday. The market was up, down, all around, but ultimately finished just a little bit lower than yesterday. If we look at the 5-minute chart of just what happened today, it spent most of the day positive, then went negative in the afternoon, back up, and ultimately finished down 0.03%. It doesn't matter, the market was up most of the day. Ultimately, it did finish lower, which means the bull call I put in yesterday is now worthless, and I lost 268 on that trade. So at the end of the third week, this is what the tally looks like. Unfortunately, not too good. I'm down $300, and the win-loss ratio is 50-50, which means things aren't really working out as I intended. There are 5 more trading sessions in this month, so I just want to finish off October and see where things stand. But for next week, it looks like we're going to continue heading upwards, at least for Monday, because the trading range of today was higher than yesterday. We had a higher high and a higher low. And if we take a look at the last few days, there's a support line going up on each of these red wicks. And on Monday, the 28th, that line is going to line up at roughly 58.17. So I'll see how much it costs for a 58.10 call option. Buy the 58.10 and sell the 58.15 and see if I can get it for 260.
Order filled.
Not quite, but I got it at 265. So we'll see how that plays out on Monday. There is a 2/3 chance the market is going up in the next trading session. So we'll see how that goes. Overall, I'm not too happy about the win rate so far, but there is still one more week to go, so things could still turn out well. When this month is over, I will give a final update. Thanks a lot for watching, and until next time.